even though I was born with some talent and could excel at things, I actually had to rebuild my mind. Now, like, I know how to go through rough seas because I just know everything's uphill. I know how to reset the sails. And in this market, I don't trust my feelings or what the people are feeling. I just trust the process.
Hey everybody, welcome again to another episode of On the Exit.
On the
I'm
Exit.
Caleb, and I'm joined as always by my co-host Aaron. What's up, Aaron?
How's it going, Caleb? How you doing today?
Man, I'm doing awesome. I'm really enjoying these roundtable discussions that we're having. We've got some of the top performers and top producers in our network multiplier model program here in town with us. We got Wayne Johnson in the house, right?
Yes.
Wayne is, if this is your first time tuning into these roundtables, Wayne is a titan in the health and wellness industry. He built a $500 million company, lost it essentially overnight, then turned around and basically did it again. And so Wayne, we call him Wayne the Train. He is also the founder and principal of Exodus Legacy Trust, where he helps entrepreneurially minded families secure legacy and wealth through passive real estate investments. So Wayne, thanks again for being here with us, man.
Absolutely. Let's go.
We also got Tony Akins. Tony Akins, what's up, man?
How you guys doing?
Let's go. Tony's the founder of Equip Star Fund, where he's a career public servant. He grew up kind of, as he says it, Dust Bowl immigrants, right? And bootstrapping a legacy in construction and real estate and, that kind of thing. And now you serve other, career public servants and helping them to be able to diversify their portfolios into passive real estate investments as well. So, Tony, thanks for joining us here.
Thank you for the invite. Appreciate being here.
Absolutely. And last but not least, Kenny Johnson, host of the Invested Fathers podcast, left a successful sales career in the service industry to launch out and, take the risk, take the leap into real estate. A lot of experience in the real estate space, has been able to build a substantial real estate portfolio that has driven his desire to build a lifestyle by design, spend more time with his family, be an invested father, and he helps other fathers and families do the same thing. Thanks for joining, Kenny.
Happy to be here.
Awesome.
Come on.
So good to have you guys.
Yeah.
So I guess on this episode, we kind of wanted to talk a little bit about how to create wealth in a recession. And, I'm just thinking a little bit about my own journey and the industry I'm in, which is real estate. I bought my first, property when I was 22 years old. I'm 42 now, so 20 years. Had a bunch of single family homes, kind of went through the '08, crash and, experienced that. That was kind of my first, recession. And now feels very similar to that. The capital markets, how hard it is to raise capital, the challenges of financing. You talk to people who were buying, properties back, 2010 to, it was mostly with cash. Getting a loan was super hard. And then we also had, COVID. I remember, April 2020 having multiple fourplexes under contract, and that was a recession. Even if it was kind of created in a way that caused lending to dry up, where our lender actually called and said it was literally like 8 days from closing. They're like, hey, we can't do the loan, like just stuff like that. And then now we're in kind of a recessionary environment. And so I'm just thinking of those three different time periods that I went through as a real estate investor. What are some of the challenges in those? And I just think like you always have to think long term. And I'd love to hear your guys' thoughts on, some of your takeaways on you guys have been through some of these times, what your takeaways are, what your thoughts are, what opportunities are there. And for me, one of the big things is even in this environment, when it's very difficult, it weeds out a lot of competition.
Yeah.
Because people don't want to do it when it's hard.
Yeah.
They don't want to, because people everyone wants to make money quickly. Or they want something to just work in a year, or they want to not work at all and just get that money or some, and that was what was happening a lot during right before COVID and leading through COVID when, all the rates were 3%. I'm specifically talking about real estate here, where everything's just skyrocketing, artificially almost just, 10, 20%. You're not a good operator necessarily, and you're just, raking in, and now it's the exact opposite. We're now at you have to find those good deals. It's challenging to get them closed. You have to operate them well. And that just gets rid of a lot of people because they don't want to do that, you know? And so for me, I think that's where there are a lot of opportunities because you know the newer like newer syndicators or kind of like people who it was a side hustle for them, you know, like they're not going to last through that.
Right.
And so I think there's like bursts of like it seems like every 5 years, you know, there's a new burst of people that are like, hey, we're going to do this, you know, and then they're all gone, you know, like,
Yeah.
I mean, even from a business, like statistically, like, you know, I think it's in the first 2 years, like,
98%.
yeah, it's like after 5 years, 20 people start a business, there's only one left. So it's like a 95% over the 5 years. And,
Right.
you know, because 5 years is like a chunk of time. And like people are like, it got too hard, you know, or it didn't work out, or, you know, that wasn't that long term. And so, like, for me, I just think like so much is mindset. I don't think it's even the industry you're in necessarily is not even the main thing. It's not how much money you have. It's not even the skills and talents you even have. I think it's just your mindset and just being like that long term where it's like sometimes it's gonna be easy. I don't even think about it being easy or hard.
Yeah.
It's just like this is what we're gonna do for a long period of time.
Yeah.
And but you do have to be adaptable, I feel like, in those recessionary times and pivot, and you have to be, you know, we're all entrepreneurs here. Like there is that element of like not being too rigid or just like stubborn where you're gonna do something that's just like doesn't make sense.
Right.
I think
But,
it
yeah.
really comes down to understanding, you know, Ray Dalio put out a video over 10 years ago where he talks about how the economic machine works, right? And it's understanding like literally the US economy and basically any other capitalist economy, right, is driven by basically only two things. It is the short-term and long-term debt cycle and human psychological response to those things, right?
Fear and
Like that's
greed.
basically it.
Mm-hmm.
And if we understand when there's, you know, when fear comes into the market, people pull back, right? Because fear cripples. And so the people who can be more resilient in those moments are able to step in and create opportunities because there's not as many people. And Aaron, you mentioned you have you know, inexperienced people or people that they just won't do it or can't do it because it's too hard. And that sort of compounds the situation because it creates fewer buyers in the market, which then, you know, makes it a more difficult market overall in the short term. But the reality is that for folks that can be buyers when there are fewer buyers, they're going to get a lot better deal. Right? It creates discounts. It creates opportunity because then when there are a lot more buyers, obviously it's everything runs on supply and demand. Supply and demand is driven by human psychology and the short-term and long-term debt cycle. And so if you can understand like what we're feeling in a recessionary environment, something like what we're feeling right now in the current economy, this is very normal to
Well, and the
hundreds of
thing
years of
is-
history.
Yeah,
Go ahead.
100%. I mean, you said feelings is we should never go off of our feelings, right? We
Yeah.
should go off of,
Yeah, the emotions are gonna
But
fast.
everyone does.
the fundamentals and,
Like-
you know, going back to the mindset is, you know, John Maxwell says, everything I want in life is uphill.
Yeah.
So if you really believe that and you're true to that, then like every action, everything you're doing is like, there's always going to be an uphill slant to this. And so, you know, that's why when cryptos had its big run and other things that come and, you know, I have a little portion of crypto, so I'm not like ripping it down, but
Yeah.
you know, anything that has an easy attachment or no work attached to it, I'm like, that's false. That goes against like fundamental principles like from the word of God. And that's what I believe is like, this is how the world works with fundamental truth is like, there's work, there's uphill, there's going to be adversity. And I also tell people that, you know, a lot of people say that, you know, some people are born different, but I believe people are built different, meaning that I actually was a quitter in sports and things when I was younger and had some quitting moments. And so even though I was born with some talents and could excel at things, I actually had to rebuild my mind to be built different. And so now, like, I know how to go through rough seas because I just know everything's uphill. I know how to reset the sails. And in this market, I try to like go against I don't trust my feelings or what the people are feeling. I just trust the process.
Absolutely.
And so that's my mindset. Everything I want in life is uphill. It's going to be work, and I'm going to enjoy every piece of the work.
Absolutely.
That's good. Yeah, I think if you go in with that mindset, like if you expect it to be difficult, like then you're right. You know, it is going to be difficult, and then maybe it'll be easier. Maybe you'll get some little wins, or maybe there is a couple downhill. You know, little you know, quick wins. But those aren't. You don't build around that.
Yeah.
Right.
As you know, because then it's just because it's not going to.
And it's not that we don't have fun. I mean, like working hard, it is fun. Celebrating, being around the right teams. I mean, all that's fun. There's many celebration moments. Yeah. So I'm not just like whipping myself on the back every day, like get uphill, Wayne, and keep going uphill. Don't ever stop. Don't ever rest. Like we Sabbath on Sundays. We take breaks. Like, you know, we're very intentional with our time to do all those things. But then like we put in the work, just flat out. We put in the work. We want to outwork people.
Absolutely.
Yeah.
We talked on one of the other podcasts about, you know, there's going to be losses. There's also going to be these black swan moments that you've talked about. And that's just part of the landscape of doing what we do here. I think the book, Somebody Moved My Cheese, the cheese is going to move. You've got to be ready to adapt to that, to your point earlier. And so that's just kind of one of those constituent beliefs and trainings that you have to have in this industry.
Yeah.
I'd
No,
love
it's
to hear Tony or
No, I was gonna go ahead and ask.
I was just gonna say what you kind of have done through, I guess, we're talking about kind of recessionary times, COVID, the environment we're in right now, to build wealth. What's your mindset? What feelings have you had? Has that changed anything of your course of action?
There's always going to be opportunity. I've heard it on some of the equity shows. You know, there's always a bull market somewhere. You're going to hear that recited time and again. I found some distressed lending opportunities personally in this environment. You know, I've touched on tax liens in the past, and that's always been an opportunity for me. So there's always going to be something out there that you can leverage. Rob Kiyosaki talks about working to learn and working to earn. And maybe we don't, you know, have those premium returns in every market. Yeah, we might not be meeting the metrics for a true recession right now, but certainly I think when it takes $400 to fill up your grocery cart and it takes $150 to fill up your gas tank, people are definitely feeling those pressure points. So as these opportunities present themselves in these more difficult markets like that, we take advantage of doing it when it's difficult. And that's where we acquire skills that are going to serve us best when the market gets better. Being in the market sometimes is more important than having every deal come out at the top of the pro forma.
But even if you look at like historically, you know, Warren Buffett is famous for saying when there's fear in the market, it's time to get greedy. These are actually the times to buy, specifically real estate. Like, I mean, we see deals, you know, in top markets that are trading at 20, 30% discounts right now because there's so far fewer buyers. It's harder to get it to pencil with interest rates going up historically over 2023, you know, at a historical pace faster than it ever has. And a lot of people think, oh, they're going to come down this year. I don't think they will. I think we're going to be in this kind of, you know, sort of downward or lower trajectory in the short-term debt cycle, probably for another 18 to 24 months, which to me is exciting.
Yep.
Right.
Because it's a window of opportunity for those who are paying attention. And so, you know, Kenny, I know you're partnering with us on a development project as well as, you know, the rest of our panel here. And, you know, I want you to share a little bit about, you know, why building new apartment buildings in an environment like this is a gold mine opportunity.
Yeah. No, I like that you said you're excited about it. I was getting excited too when you start thinking about, you know, the current's going this way, but there's one or two fish that are going upstream. You know, they're the ones that are, you know, getting whatever it is that they're getting. I don't know what they're going for necessarily, but there's opportunity when everything is going this way that you're going the other way. And specifically with new development here in Kansas City, which, you know, we toured yesterday as a team, and just amazing to see the teams and the bankers and the lenders and the workers and all these people come together to get this one big thing done is really exciting for me. Just that aspect of being on a basically all-star team, you know, built by you and Aaron, and seeing basically what can be accomplished when you're prepared I think, you say you're excited. Well, you're excited because you're prepared. You've been working for the last 38 years of your life, maybe not necessarily since you were exactly born, but I do know your journey, and you've been a hard worker for a very long time.
Yeah.
You have certain parts of you that are ingrained to figure out, how can I solve this problem? How can I do this? I'm not going to just sit and wait for things. I'm going to pursue, and I think God's given you so many gifts and talents, and you've used those, and He's rewarded you with successes. So when we talk about recession and fear, and we're building this massive thing in an uncertain time, we're taking risks, mitigated risks, calculated risks, to get huge rewards. We can sit and talk about well, what if this happens? What if this happens? Well, what if we win? What if it's a grand slam?
What if we don't fail?
We're doing really well, and the things that we are risking are very small, because we have an all-star team. We have great lenders. We have a great track record. We have a great plan, and the market is great right now.
Yeah.
So anyway, I feel like what kind of squashes the fears and those uncertainties is, I'm prepared for this, and I'm looking at everything, and I'm ready.
And historically, the time to invest is during a correction or a recession.
Yeah.
When everyone feels good about investing, everyone's doing it.
Right.
When everyone's not doing it is the best time to do it.
Yeah.
Right. And I think even, development, multifamily development, which is something Aaron and I are super bullish on in the current market. Like, we see, a bull run coming in the next 2 to 3 years for that kind of asset. And the reason for that being is 70%, new development starts specifically in Kansas City. One of our markets in focus is down 70% over its 10-year average, which means the number of units being built right now is 70% less than it has been over the last 10 years consecutively. And yet lease-up rates are stable and growing. And so when you project out the supply and demand situation, it's a pretty strong economic indicator that we're in a good position if you're able to make a new development deal work in this environment, which we've been able to do.
And the affordability of single family ownership, how that's skyrocketed. And one other, quick tip is, I don't look at the news or read anything from the news until at least 3 p.m. every day, because again, it's like, it has none of the news from yesterday has any bearing on what I'm going to accomplish today. So, again, just a mindset of staying the course and building. So even though they say, housing is all of a sudden expensive and unaffordable, it's like, well, then there's an opportunity to actually build really nice assets that people that can't yet afford a single family home to actually go live in a really nice multifamily development. And we're going to be able to provide that. And hopefully we'll catch some of those people, and we can educate them, teach them new, things about financial IQ and discipline, and they're going to be able to afford a house. So, it's like everything we're doing is we're trying to add value to the market and counteract what the news and the fears trying to always project on people. And we can just be this beacon of light with everything that we're doing and building. And so we're not just building and making the profits, we're really providing for so many people. We're filling needs, and that's, you make money when you fill needs. So
Absolutely.
That's awesome. So big takeaway, it sounds like, there's always, like you said, Tony, there are always going to be opportunities in every economic cycle and every set of circumstances. There's some path, so always be taking action, and always, knowing that it's everything you want is uphill. Yeah. That is good, and knowing like this is just part of how life works, and we're not gonna get out of the game. I always like to think of like, this is the time to like sharpen our swords, and like, cause I hear like real estate investors like, well, I'll just wait for a while. And it's like, you're going to be dull. Like in 3 years, when it's time to get back in, you've lost a lot of opportunity. Like, you're not even in the game anymore. Like, you're soft. This is a time to exercise our muscles because it's difficult. So I think like you come out of that way stronger. You come through that, having worked through it, having developed yourself, having developed your team, versus just kind of waiting and being like, oh, when it's easy, I'll work again.
Yeah.
People will go where the opportunity is. I'm a living example of that. In 1938, my dad got on a train down here in Howell, Oklahoma at 16 years old, out of the Dust Bowl, and went out to California because that's where the opportunity was at.
Yeah. Wow.
That we're a receiver state out here in the Midwest, in Kansas and Missouri area, where a lot of these opportunities that we're starting to develop are at. And that trend we'll see it happen again. People will do extraordinary things. They'll go to where affordability is at. And if we're prepared to receive that and take advantage of it and provide them a high quality product, we're going to be in a great spot.
Absolutely. One last thing before we sign off, and that's that, you know, this whole conversation is about building wealth and taking advantage of a recessionary environment. We've talked a lot about going uphill. You know, everything you want is uphill. One thing, though, is if you're taking the hill, it's better to do that with other people than to do it by yourself, right? To go uphill by yourself is far more miserable of a journey. It's a lot more fun. It's a lot more enjoyable, and your likelihood of success is a lot higher if you do it with other people. And that's what's really exciting to me about some of the things that we're doing right now is we're putting together contexts where you can be a part of something that is with a group of other people that are like-minded, that are looking to take advantage of this current situation, to where you're not laying all your eggs into the basket. You're not having to be the only one, who's contributing, the only one who's being a part of this. You're actually able to do this and share the risk and the reward of the accomplishment with other people. And so I think
we had a couple huge closings, and you were on a 2-week trip to Europe with your wife for anniversary, and then Aaron was in Hawaii for a month, and I was left here doing all the work. No, I mean, we were we closed on all this stuff, but it was just like we understood. And last summer I took my family for 4 months to Europe. But we were in conversations, and I was doing some stuff to kind of get the ball rolling. And, and it's just it's just a maturity of everyone's like, hey, when we're all home together, like we are all charging up the hill, but sometimes one of us is maybe carrying and lifting us up and kind of keeping us going up the hill while we're in. And it's just a beautiful thing. I mean, most of the time I like you guys to carry me up the hill, but
it's better.
It's but it is that concept of just everyone lifting together. It's that lever concept where we're all pushing together. We don't have any scarcity. We're not in competition with each other. We're just like blowing wind in each other's sails to get to the goal that we have as a team.
This is a great conversation. Again, thank you for watching, listening to this episode of Own the Exit, where we've been talking about how to use a recession to get rich. I mean, just plain and simple, and how we're doing that. Hey, if you are interested in learning more about how we're doing this, you want to connect with us, why don't you comment on YouTube? We'll reach out to you. Why don't you send me an email? Caleb@oakiq.com. Be more than happy to start a conversation and share with you a little bit more about what we're doing and how you could be a part of it. I would say that's everything for us. Why don't you sign us off, Aaron?
Yeah, again, thank you guys for joining in on this. Super excited to have you guys, just adding so much, perspective from varying, walks of life and experiences. So really appreciate you guys jumping on. Thank you so much to all of our listeners. Own the Exit. Thanks for tuning in, and we'll see you next time.